All right. Money Matters with Matt and Rich, episode 6. Six in the books.
Yep.
Welcome, Matt. Thanks for again letting me lead off. I appreciate that.
Yeah, no, I like it. I actually kind of like when you lead off.
Hand the mic over. I love it. I love it. It's great. We've got some good stuff today. We've got someone calling in at about noon. Yep. Has a couple questions. So that's a great service. And I think if anybody else wants to call in, let us know. We can get that set up and scheduled. I think there's a lot of value to that. Hopefully you'll find some value with the caller today to be able to answer either some questions that you've had before or maybe spawn some new questions. That's what we're here for.
Yeah, and ask the tough questions. Don't be. I mean, obviously the generic ones are awesome, but like if you have a situation specific to yourself, ask it. We want to help you.
Yeah, exactly. That's what we're here for. And this podcast is evolving. We're going to be able to start doing more live stream. These call-ins are going to be something we can start doing. Facebook Live, YouTube Live.
Yep.
Your guy was just saying that we're going to be able to put a caller on Zoom.
Yeah. So for those that are watching on the straight video ahead, we have like a little screen behind us. We can put people on Zoom, and their face will actually be there, so we can actually have a conversation with somebody. It's not the phone calls are awesome. Usually, obviously, you hear the voice and all everything like that, but they can be on the physical video end of it too. So that just makes it so much easier.
Evolution. It starts with an idea and then it grows.
Right.
It grows. I think that's awesome. I think that's this has been a lot of fun and it'll continue to be a lot of fun.
Yeah, I just I like that we can continue to evolve it, right? It's not, we don't want this to be I don't want to say your typical podcast where it's just us talking. There's obviously room for that in the industry, but we want to do more. We want to be more interactive. We want to be, just different. I think a lot of people just have the podcast where they talk back and forth.
Sure.
But if we can get other people involved or like we were talking about, get other, investors in here, other real estate agents in here, other title, whoever it is. To actually come in and provide some insight on what they do or just have a conversation with us, I think it just adds. We want to add more for the audience here.
Right, because along with us talking to each other, you should be able to learn something with that. But again, having those other professionals in too, learn a lot about what that looks like and be knowledgeable of that process.
Right.
So when you get there, maybe it's a year from now, 6 months from now, or 5 years from now. You've heard this before. And you contact one of us, you're like, oh, I remember hearing you guys say that.
Right.
Or I called in, or we talked about it. I sent you a message. Because this isn't about us.
Right.
It's about you guys. It's about everybody else and trying to provide some insights and value to you. And if you've got questions, ask them. We can get them answered.
Yeah.
We can get them answered.
Yeah. Like just to reiterate, we want the value to be for people listening. We want them to be as informed as possible.
Yep.
So when they are ready to buy or to sell, they at least have some bigger tips, pointers in their head that they remembered from if they watched from this.
Yeah.
Right.
Yeah.
And they remember, okay, I remember X, Y, and Z. Maybe I don't remember the nitty gritty of it, but I know this could be an option or this is what to expect. And
the broad brush strokes, and then we can get down to the fine print once it actually becomes something you're interested in.
Right.
But Matt, what's the little bit of a roller coaster ride this week with rates? I haven't talked to you about them in detail, but I have heard that there was kind of an up or down, a little bit of both.
Yeah. So since Monday I can do math the first. Monday, August 1st, they started to dip down pretty drastically, which is crazy because it was after the Fed raised rates, which I think we talked about in one of our previous ones where the federal rate doesn't always dictate mortgage rates, and this is a very good situation of that. But they've been doing this roller coaster of up and down, and honestly, it's been going up and down by like half a point in the last probably 10-ish days.
Half a point's a lot of money per month.
Yeah, half a point's a lot.
On your monthly mortgage, that's a lot.
Right. So, for instance, last Monday, we finally saw high fours again, which we were all like, there's got to be something wrong.
So it came down to high fours.
Yes. I probably should say that.
No, that's all right.
It came down to the high fours, and then by that Thursday, it was back to 5.5, and we were like, wow, this is This is weird. And then it slowly has trickled down, and right now we're back in the high 4s again. And it seems to be to kind of be leveling. And the reason we know that is the mortgage-backed securities market, or the bond market, is starting to level. It's not doing this crazy thing as it was doing the last few weeks.
Yeah.
I honestly, looking back on it, I'm not overly shocked that it was volatile, because investors, I don't think, really knew what to do. They didn't know how to react to this federal news. And then I think the July inflation report came out like a day ago or 2 days ago, and it was 8.7 or 8.18. It was 8%, 8 point something, which is high, but believe it or not, that's lower than June. So this is actually starting to trend in a better direction. So buyers, we always say it's a good time to buy, because real estate, if you hold it long enough, it's going to go up. Yep. But realistically, I mean, we're back in the high 4s for conventional loans. Like this is we haven't seen this in a couple months. So this is really good news.
And this podcast and video will come out later, so it might be old news at that point. But again, why we're going to go live for a lot of stuff, and why we're going to incorporate a lot of this stuff into more of an instant access thing.
Yep.
But reach out, because you never know. Maybe in a week or two it's 4.5.
Yeah.
But from 5.5 to high 4s is like, I don't know the actual dollar amount, but like
it's a drastic difference.
A big savings on that.
It really is a drastic difference.
Increases your purchasing power.
And and that's the other good part, where buyers' purchasing power is now higher, and the market's starting to come down. So this is a really good time for buyers. And I think buyers I have that have been waiting are getting really, really excited, because they're starting to see that the end of the light at the end of the tunnel might actually be here for the time being anyway.
Yeah.
So it's really good news for buyers.
You can negotiate on deals. You can get inspections on deals. Yep. You can get concessions on deals.
Yep.
It's unreal. Like
it's actually almost normal. And I say that in a very relative state of what we just experienced. It's just still not normal, but we're starting to trend there, which I personally think is awesome.
Putting a little bit more power back in the buyer's hands. Again, not fully there, but we're going in the right direction, at least for the time being, and hopefully, get more buyers into more homes.
Right. And I mean, I don't know if you want to talk from your end. I mean, I guess you did a little bit there, but if you want to expand on, what you've been seeing with potential buyers that you have, do you feel like they're starting to become maybe a little more motivated, just a little more hopeful? Like, do you see that in maybe conversations you're having?
Yep. So I've been reaching out to a lot of people that have been, they've been on the sidelines for a little while, or, they got disgruntled with the last, year or so, and just reminding them, hey, interest rates are higher, and we might be looking at a little bit different home, but if you still need a home or want a home, let's go look at the home, make the offer that makes sense to you. Right? If it's been on the market, I think we've talked about this before, if it's been on the market 21 days, 30 days, then you're not getting into a bidding war.
Right.
Very likely not going to get into a bidding war.
Right.
The chance is still there that you do, but make the offer with concessions towards your closing costs. Reduce your points if you can with that concession. If there's a lot of different strategies that now we can start to kind of like incorporate into an offer, which we didn't have the opportunity before.
Yeah, and I mean, a quick story, even like, in Salem, New Hampshire, one of our LOs had an agent who had a house that he said it was the busiest open house he's ever been to. It was like a 3-1, like perfect starter home, listed under $400,000 in Salem, which was like, holy crap, wild. And they said they got one offer. And there was, 30, 40 parties that came through.
It's just crazy.
Which is crazy. Like, it just, you got to understand, like, how drastic of a change that is. You used to not be able to get anything in Salem for under 500, let alone now we're talking about, under 4. It's a 3-1. We're looking at 1,100, 1,200 square feet, but like, for a starter home, like they're starting to come out there
in a great area.
Yeah.
Close to the border, close to get into, if you got to still go down to Boston or something like that.
Right.
Or if you work from home.
Right.
You're in a great spot.
Right, exactly, especially with Tuscan being built and all of that.
Yeah.
Let me see. Oh, I thought he was calling. I thought we had the caller come in.
Caller. The noontime hour has presented itself.
Yeah, so
if you're out there listening, I know we're not live, but feel free to call in now.
Let me see where he is at, just to make sure. That way, at least that what's it called? Because maybe he got distracted.
Yeah, that's all right. Yeah. So, and again, just kind of along with this, we're innovating and changing and, trying to incorporate a lot more of your feedback and what
and
you
here he
need.
is. Look at speaking of the devil. So let me put our fancy headphones on. Hello, caller. Can you hear us? You there?
Hello?
Hey, can you hear us?
Yep.
What's going on? All right, so I will have you introduce yourself, whether it's just first name or first and last, I don't really care, and where you're from.
All right, my name's Sam. I'm from Rainham, Massachusetts.
Awesome. And what questions do you have for us, Sam?
Yeah, so I'm actually a recent graduate, kind of starting to look through the housing market a little bit, looking to buy a house, relatively soon. So I guess I was wondering you guys' opinion on the market right now, whether looking for a house as a first-time buyer is something I should wait on a little bit, or if, now's a good time. And, maybe just some of the stuff about like interest rate hikes and how that's going to affect somebody like me.
Yeah, perfect. That actually works out perfect.
Congrats on graduating. You recent grad. Congratulations. That's a big achievement. Good job.
I believe it was law school, right?
It was law school, yes.
Awesome. So to answer the first part, we always say, it's never a bad time to buy, but especially when you're talking about, first-time home buyers right now, and this literally works out perfect because we were just segmenting from this. The market is starting to ease. I don't personally know about, the South Shore of Mass market, but if it's anything like North Shore Mass, it is starting to ease up a little bit. So personally, I think it's a great time. I think it's a great time to start looking into it at least and, looking over options and, seeing what's out there and maybe your price range or what you're comfortable spending. What do you think, Rich?
Yeah, I mean, it's kind of a tough question to ask without knowing your personal, wants, goals, desires. Again, if you're looking to stay in that area, yeah, I mean, it's going to be area specific, area dependent. If it's, you're a recent grad, so, maybe you're not making the money that you will be in the next, 3 to 5 years. So getting in touch with a lender like Matt is important to kind of see where you're at with that. But yeah, now is the best time to buy real estate was yesterday. The next best time is today. And the worst time is always tomorrow.
Yeah.
Because tomorrow is going to be more expensive than it is today.
Right.
Unless the Fed does something crazy like they did during COVID.
Right.
Yeah, unless they manipulate the market.
Right. Right. And then, that second part, the interest rate hikes. So that is actually just the federal fund rate that got hiked. Mortgage rates actually dropped. So to give you some insight, we were at about 5.5 2 weeks ago, and now we're in the high 4s. So we've dropped almost half a point. So when you're talking about a market where there's more homes coming, the prices are easing, and the rates are falling, this is like that really shouldn't affect you, right? And the best quote I ever saw 3 months ago, I wish I remembered who posted it, was marry the house and date the rate, because you can always refinance your rate.
Yeah, I've been saying that.
Yeah,
that was me.
Oh, well, perfect. It was Rich.
I probably got it from somewhere else. Though, so.
But you date your interest rate. You don't. Yes, it's important, especially you want to make sure you can afford the monthly payment on it. But you can always refinance when these rates go up and down, because that's what's exactly going to happen. And guess what? You think you're locked in at your 4.5 for 30 years, but then all of a sudden, you run into a situation, you don't have an emergency fund, you have to cash out refi, and then everything changes. So in terms of the rate hike, there really isn't one right now, believe it or not, with mortgage rates, but we don't have a crystal ball, so we don't know what's coming.
Right, yeah, no, that makes sense. That's a good quote. I'm going to keep that.
Yeah, do it. Did you have anything on that, Rich?
No.
I know you're not on the lending side, but
in regards to just like home values and over time, over the last 40 years, like nationally, they've only appreciated. Mm-hmm. I think in the 90s, in like 1991 or something like that, it dropped like nationally 1.2%. Mm-hmm. But every other year, appreciation has been like 3+.
Right.
Every year.
Right.
Even, the crash of 2008.
Right.
So, yeah, no, it's always a good time to buy for people that need to buy or want to buy. It's just figuring out what you can buy.
Yeah. Let me ask you quickly, Sam, too. What do you know what kind of property you'd be looking at? Because that could also potentially help the answer.
Yeah, so I mean, I don't know, like if this is something that you guys have talked about or want to talk about, but I've been pretty interested in the idea of house hacking.
Mm-hmm.
So you buy multi, you live in one of the units, rent the one or up to three more, and basically then at that point, after living in it for 2 years, either refinance or sell to buy your dream home. So that's always been kind of an interest and a goal of mine.
Yeah. And I mean, I can speak from the letting side of it. Like, that is how I usually have people go that know they want to eventually get into the investment, game of it, and are willing to go into a multi early because it's significantly cheaper than going the other way around. If you buy your single family first and then your investment second, you got to put 20 or 25% down on the investment versus 3.5% or just 5%. So that is 100%. If you're going that route, to me, that's buy immediately, because you're going to probably hold on to it for the long term, and then you're probably into it for the appreciation more so than the cash flow on just one unit. Now, if you want to start buying, 4, 5, 6, 7 houses, now the cash flow is really coming in, but that one unit will just appreciate over time. What do you think, Rich? You're very much so into this, so.
Yeah, I mean, if you're a recent grad, I imagine you're a little bit younger, so do that, exactly what you're saying. Do it now.
Yeah.
Don't wait. Do it now. I got into it later, but I wish I would have gotten into it sooner because I'd know a lot. I would have known what I know now a lot sooner, and I'd be, 10, 15, maybe 18 years ahead of where I am now. But yeah, so yeah, buying and letting someone else, help you with your mortgage payment is always great. House hacking, multi-unit properties is the best, the best being 4. Next best being 3 units, and then a duplex, is kind of where a lot of people start. But let your assets pay for your liabilities, right?
Right.
So like a single family home is a liability. It's not making you any money unless you rent out by the room to other roommates. Then that's a form of house hacking.
Right.
But buy assets, buy a multifamily home. Maybe then you like you said, refi out to get your FHA loan back, or the ability to use that to get another one for 3.5% down, and do it again. You can do that, almost unlimited, I believe.
Yeah, so you'd have to go through a different lender, which working with a broker, that works because we have multiple lenders.
Yeah.
But if the same lender catches on to it and they're like, oh, there's a specific timeline here, what's happening, underwriting will shut it down. But if you can do that probably three-ish times with the same lender, but if you just go somewhere else, they're not going to know.
But imagine if you did that 3 times over 3 or 5 years, you'll now have a minimum 6 units over 3 buildings, potentially even
up to
16.
Yeah.
No, 12.
12.
Sorry. If you bought it 4 units each time, 4 unit, 4 unit, 4 unit, that's going to pay for your single family home. When you refi that last time and say, hey, you know what? I'm done with this. I want to buy a single family home and I want to, settle in. The cash flow, the appreciation, everything now pays for the house that you live in now.
Right.
Like,
it's a no-brainer. If you're willing to live in the multi, it's a no-brainer.
If you're willing to do it, you could probably realistically do that all within a 5-year period.
Right. So that's a great question, Sam.
Yeah, that's the goal right there.
Awesome. Well, thank you for calling in. And guys, if anyone else has any questions, just let us know. But Sam, thank you.
Thank you, Sam.
Awesome. Thank you, guys. Thanks for your time. It was a pleasure.
Awesome.
All right. Good luck.
Yeah. So guys, obviously, like we talked about, house hacking is, a way to build wealth tremendously. If you, not just the cash flow, but like we talked about the appreciation. When you go, you hold that house for 30 years and you sell it, and it's like, I mean, we know what real estate does. The house value doubles, and you got 3 of them that you bought at $400,000 a pop. Like,
and you have some control over that too.
Yeah.
Like you have control over that unit and that building and how it performs.
Right.
Whereas, your 401k, you have to wait till you're 60 to cash out on it.
Right.
And
it'll probably be older by the time that you actually get there in 30 years. It'll be 65 or 66 by the time my generation especially gets there.
Yeah. And someone else has control over that, not you. somebody else is the only people that get rich on 401ks are the people running the 401ks.
Right.
They're getting
Unbelievably wealthy.
no matter if it goes up or down, they're still making money.
Right.
Whereas you're not.
Right.
And you got to wait till you're 60. So
Right.
that's my little diatribe on 401ks at this point. But yeah, no, it's at least a tangible asset that you have control over.
Right.
And you can make better or make worse.
Yeah, and I'm glad he brought up refinances because that was, a question that, I get a lot and I got recently is, what are the different types of refinances? Because I don't think people realize, I don't even know if I just mentioned it there, but, pulling out cash from your house.
Cash out refinance.
Right, you can do something called a cash out refinance where as long as you have the equity position, you can pull money out of your property. You have to go up to, in most cases, unless it's a VA loan, you can up to 80%. VA loans for us, you can go to 100%. So that's something that separates us. But generally speaking, 80% loan to value. What that means, if you have $300,000 left on your mortgage and your house is worth $500,000, you could hypothetically take out $100,000. Because you have to be up to that 80%. So that's a situation where people will use that to go buy, other assets, or they'll use it. Some people use it to buy stupid things, but
no, buy assets. No. Don't buy liabilities unless you've got something you need, like medical or family issues, or something
severe emergency,
something you need that money to do that is for your family and stuff like that, or. But yeah, don't go buy the newest Lamborghini, BMW, whatever. Like buy assets with that, because now you're paying that
over 30 years.
Over 30 years, fixed rate.
Yep.
Yeah, fixed
well,
rate.
you can go fixed or adjustable, but I mean, fixed is usually 99%.
If you can go get a low fixed rate, lower than you could get if you use that money and got it from somewhere else.
Yep.
Yeah.
Right, and that's exactly it, right? It's cheaper than a personal loan. It's hell of a lot cheaper than hard money, right? And I think a lot of people get tripped up because their mortgage amount goes up. But then I urge them, like, if you need $100,000 for something, where else are you going to get $100,000? Like, there's not a lot of places where you get $100,000 at a 5% rate. There's not. Nope. So I
know where you can get $100,000 for 10%.
For 10%, yeah.
But, $100,000 at 5%.
For like 5%, it's not out there, right? So that's where that's one option. You have your typical rate and term that everyone knows. You lower your rate, lower your term, however you want to do it. You can even go up. You can go from you're having financial hardships and you're going to sell your house soon, you want to go from a 15-year to a 30-year just to ease the cash flow until you sell, right? We can do that. And then when you get into VA and FHA, you have this FHA Streamline, which is a no-doc loan, so we don't need anything, right? All we need is typically an appraisal, and then we do need to see your income, so I guess not no-doc. That was wrong.
You got to make some income.
Yes, but then as long as your interest rate is lowered by 0.5%, boom, we're good. Right, it's very, very simple. It's not the whole typical refinance process. And then a VA IRRRL is pretty much the same thing. It's got to go down by at least 0.5%. It's got to make sense for the veteran to do so. Tricky part with the VA IRRRL is it's hard to go from a 30-year to a 15-year. You have to. There's a ton of math that goes on.
And
in the back
that's a rate
end.
and term only.
So that is So it's an interest rate like reduction refinance loan. Okay. So it's essentially the quote unquote the Streamline. You can still refinance not an IRRRL into a VA for a 15-year, but IRRRL just requires significantly less documents. It's just a lot easier for the vet. But there's different options out there.
Now, did you say you could do a cash out refi on a VA at 100% loan to value?
Yep, up to 100% with us. You can go. It's pretty wild.
It's unbelievable.
Yeah, it's pretty wild. You can take out your entire home's equity and go do something with that money.
God.
Yeah, exactly. And that's exactly it.
Go do something good with it.
Yes, please go do something good with it. And then something we mentioned earlier. A little bit, we talked about seller concessions and kind of streamlining out of that is, can I finance my closing costs? A lot of first-time home buyers get asked this because obviously closing costs are, they're a lot of money, especially for a first-time home buyer who only is thinking about the down payment.
Yep.
So just to reiterate, in New Hampshire, closing costs are between 3 and 3.5% of your loan amount, just depending on taxes, when you buy, all that fun stuff.
So $400,000 house, about $12,000.
About 12 12 to
14.
14, give or take, somewhere in there.
On top of your down payment.
Correct. Right. So again, first time home buyer, they're putting 3% down. So they're like, I got 12 grand. It's like, well, we need like 24 to 25. It's like, oh, crap. Well, can I finance those? The answer is it depends. And that's the answer, I feel like, for every real estate question.
Well, here's the gray area.
Here's the gray area, right? Is you have one guaranteed option, which is to take a higher interest rate to then get a lender credit to then quote unquote finance the closing costs.
Which would be paying that back more monthly.
Correct.
Essentially.
Exactly.
Yeah.
And that's
a higher
exactly
interest
right.
rate. Yep.
Right. So that's why that's usually the last option I go to. If they like desperately need it, okay, we'll entertain it. I don't usually like to go that route though. The other way is a seller concession, as we talked about.
Oh, yeah.
So for those that don't know, a seller concession is a fancy word to say seller credit. So the seller is essentially giving you money for the closing costs, but it's financed into your loan.
Yep.
So for how that would be written, if you want, the seller to net, $345 on your deal, and you want $5,000 of closing costs credited to you, you're buying the house for $350.
Yeah, and then they'll give you the $5,000 back. However, you could probably, depending on the home, in this shifting market, not have to wrap them into the loan and get them as a part of the deal anyways.
Potentially, correct.
Right, but it's going to be very deal specific.
Right.
Like, if you $345 is their asking price, what he's saying is that, okay, you want $5,000 back. The easiest and best way is to offer them $350 to give you $5 back. However, the right home, the right seller, with no offers, may take $345 and give you $5K back.
Yeah.
Because they want to sell their home.
Correct.
And they have nobody else out there offering them anything.
Correct.
So, going to be home specific,
Yep.
but that's what your agent's for.
Yeah, exactly. And then this is something that was completely non-existent for the last 2 years, which is now coming back. So when I give give buyers these options, they're almost shocked that you can do it.
Yeah.
But the important thing to note, there are caps on it depending on your loan amount. Typically, people don't run into it, but just know there are caps for how much you can actually get.
FHA up to 6%?
FHA is up to 6%.
6% of the purchase price.
Of the purchase price. So literally, you could pretty much get everything.
You could cover all of your closing costs.
Correct. Right.
If your closing costs are 3 to 3.5%, you can get 6%. Well,
right.
You can do the math.
Right. And then conventional, depending on your down payment, it's either 3%, 6%, or 9%.
Hold on.
Which is wild to me because if you put more down, you can get more of a seller concession. But if you can put more down, you have the money. So that's what I don't understand. But that is a thing.
Interesting.
Yeah.
Huh.
Yeah. That's. But again, it kind of seems backwards. But another important thing, it has to appraise still.
Yeah.
So, if you do go in that situation where you go 10 grand over, but you get 10 grand seller credit, the house still has to appraise $10,000 higher. And if it does, we're all fine and dandy. Everyone's happy.
Yep.
So yes and no, you can in a way, I guess.
Yeah. You're
still paying it.
Yeah, exactly. Where's the money coming from that the seller is giving you back? Well, it's coming from you.
Right.
From the buyer.
Exactly. And I'm sure you can speak on it from the seller's end. I mean, are they accepting the fact that they may have to go that route, or are they, I don't even know if you've experienced it with your sellers yet, but are they reluctant to do so? Does it cause a red flag?
Depends on motivation, right? If it's priced right and it's in good shape and they've, the sellers have, gotten it ready for market, with all the suggestions that I've given, and they're going with the suggested list price, it's selling. It's still selling in just a couple weeks.
Right.
Not, nothing that any seller needs to get desperate or worry about. The sellers that are out there that are maybe on the market 20, 30, 50 days, some of them, have to move, like they have to move, or, they want to get into something else. So they're going to be more willing to negotiate.
Right.
And, the first week or two, the buyers may or may not have the opportunity to negotiate.
Yeah.
Depends on the house. But, that definitely as things kind of start moving down the road for these sellers and they start saying, hey, I gotta sell this thing now. So yeah, again, it's tough. There's a lot of that gray.
Right.
Depends on the house. Depends on Salem, Manchester. Portsmouth, like where is it?
Right.
And what's
Everything
it priced at? How's it look? How was their activity the first showings, first weekend?
Yeah.
Things like that.
Yeah.
So, and
That's good to know.
yeah, I mean, and that's that's my job to find out how things are going for my buyers. If this house is something they're interested in, contacting the agent and finding those questions out and seeing, gauging the level of interest on that property in particular.
Do you find that agents are truthful when you do that? It's kind of off script here. Do you find like they actually, tell you everything, or is it more
I would hope so.
Yeah.
I would hope so. I mean, I'm going to be with the agents. So the agents, I mean, we're all bound by the code of ethics, so we're all supposed to, act ethically.
Right.
So, I mean,
you can't blatantly lie.
Your option is to like, hey, I can't tell you because your seller, maybe doesn't, the seller has said, hey, I don't want you to disclose any information about what's going on.
Gotcha.
And that's okay.
Yep.
But if your goal is to sell the property, you'll at least give the other agent some insight,
Gotcha.
right? Because the goal is to sell the property, right? The agent wants to sell it for the seller. The buyer's agent wants their buyer to buy it,
right?
So let's work together, right?
Let's figure this out.
Yeah, it's kind of a unique industry, right? Like, I mean, could someone blatantly lie? Sure,
Yeah. But you don't typically.
I wouldn't think so.
Yeah.
I take everyone for what they tell me until they prove otherwise.
Right. Yeah.
Until
that's fair.
something else is proven otherwise.
Yeah,
So
that's definitely fair. And I think that's a good, analogy, I guess, you kind of use there is, the buyer's agent and the seller's agent. Yeah, they're representing both sides, but both want to get a deal together. So it's like, hey, let's work together to figure this out, especially if I'm the only offer. Like, let's figure out how to maneuver this and get us both, to the closing table, make our seller happy, make the buyer happy. Like, yeah, in most cases, one of them's probably going to feel like they got screwed. But
yeah, but
if you
that's
can
the
limit
goal,
that.
right? Like, a good buyer's agent, a good listing agent trying to come together, work cooperatively. Yes, the buyer's agent has their buyer's best interest in mind, and the sellers got their seller's best interest in mind.
Yep.
But that's why you hire agents, because an emotional seller and an emotional buyer, they're going to fight at each other potentially, right?
Yeah.
Whereas we can kind of be that intermediary and use our skills and negotiation and be able to come to an agreement that works for everybody.
Right.
And everyone feels happy that they didn't get screwed.
Yeah. Yeah. Exactly. That
and to go back to that question on I take everyone's
like word
for what they say until they prove otherwise, right? And that is a reputation thing, right? Because again, that person may have a house or a buyer down the road, and if their reputation has then shown me that they maybe are less than truthful,
right?
How's that going to work when I come, have to work with them again?
Right.
Am I gonna want to work with them again?
Right.
It's tough. Your reputation it goes a long way with what you're doing out here.
Right. Especially where it's not like we're selling real estate in Texas where it's so massive, right? Where it's I consider New Hampshire like a small knit community almost. It's obviously a big surface area of the state, but it's where everyone kind of knows of each other.
Yeah,
right?
I don't expect to know somebody up in Berlin. I don't expect them to know me, Claremont, Portsmouth, or even to the Lakes region a little bit because I've done some stuff up there. But when you're talking about southern New Hampshire,
right,
like Concord south to the border, everyone's if you've done anything and worked any either length of time or done any certain number of business, then you probably have seen or come across some of these people before,
right,
and had to work with them or at least interact with them.
Yeah,
plus. Realtor meetups and trainings and investor groups, and we come across all the same people,
right?
So
and that's good to know, right? Like where agents, you may of the agent at least, and I think that's another benefit of working with an agent that knows what they're doing because they know other agents, and you can't literally collude, obviously, right? But if that agent knows the other agent, it's just helpful. Like they want you and him or you and her want to do business together.
Yeah, you want to do business with people you like and trust.
Yeah. Yeah, exactly. Point blank.
Yeah.
That's
Like, hey,
what
I'd
it-
love to do business with you again because we both had our parties come to a happy agreement at the end the last time we worked
Right.
together. I'd love to do that again.
Right, and just simply, like, I know your team gets things done.
Right.
Like, I know you're on top of everything. Like, I'm on top of everything. It
Yep.
just makes it so much easier.
Yeah, makes it like you said. Yeah, it makes the job easier.
Yeah.
Exactly.
Yeah.
Yep.
And the last kind of thing I had written down here was another question. Actually, this is kind of, off the beaten path a little bit, was other ways to obtain a down payment. So I think everyone thinks that the down payment has to just come from your checking or your savings account,
Oh, no.
which is not true. We can pull out of retirement to do so.
Yeah.
We can pull out of, any sort of, if you do have a trust in your name that you have access to, even if you are getting, monthly dividends or however distributions, I guess would be the proper
distribution,
word
yeah.
for it, out of it, and you have access to pull money out without, getting hit too hard that you want to do, go right ahead. Like, we can take that.
Yeah, with no penalty.
You can be gifted money, believe
who?
it or not. Typically it's immediate family. That's a safe way to say it. Again,
You can't gift me money.
unless you're a veteran, I could.
Aha.
Yeah. So that's where, again, the VA loan, this is why it is the greatest loan ever, especially for veterans.
And it should be, right? Look at
Literally-
what all they've done for us.
Yeah.
It should be the best loan. It should be very easy.
Right, for them to get.
Yeah.
Literally, a veteran could walk up to Joe Schmo on the street and say, hey, I need $1,000 to close on my house. And as long as Joe Schmo just simply, wires it over or sends him a check or doesn't
Some
just
sort of
hand him,
tracking.
doesn't just hand him cash.
I hear what I hear you saying is there's some way to track
There's some way to track that money.
Because Joe Schmo could be the dealer at the corner.
Yeah, that's true. He could be a money launderer. But yeah, if there's some way to track it, veteran's good. It could be anybody. But for every other loan, generally speaking, immediate family. Like, you can stretch it to a cousin, gets a little, sketchy because everyone's a cousin. But, some of them, they'll allow it. But, like, I forget if it's FHA or conventional. Friends are not allowed on one of them, but friends are allowed on another. Like, you got to document the relationship. So there, once you start getting past immediate family, it gets a little trickier for what, to prove that you are literally in some sort of relationship with that person. You would know of that, or that person. But gifting, again, is a great way to essentially get all your down payment, all your closing costs, however much you need. Essentially, you can be gifted that money. And then really the only other way, other than retirement or a trust or a gift or anything like that, would this is a weird one. If you have a HELOC on your property, okay, a home equity line of credit, so essentially you can pull from that HELOC as long as you qualify with the new monthly payment on that HELOC. So if you pull out 10 grand and to buy an investment, to buy any other property, as long as you qualify with that monthly payment, you can take that money out because it's not considered like a personal loan or anything like that. You have access to that money.
It's just more debt.
Correct, as long as you qualify with the debt. And I say personal loan because you can't take out any debt for the down payment, which sounds weird that you can do it with a HELOC, but you have access to the money. That's why you're able to do it. Again, it's a kind of a weird gray area with the HELOC.
And maybe because the HELOC's collateralized by a property.
That very well could be it too. I didn't even think about that. Because personal loans, it's not backed by anything.
No, it's not.
It's not backed by anything. So God forbid, you default in the house. There's nothing to grab at all.
Right.
So yeah, it's like you can't get a personal loan. You can't just match his money. Obviously, you can't just do anything like that. But there's other ways. You can. It doesn't just need to be in your checking or your savings account.
So, and that's all of the ways from a traditional financing perspective, and from some investors, if you're looking at like non-QM or like DSCR or commercial, or well, I shouldn't say commercial. I'm not as familiar with commercial, but some of the lenders that I've used to acquire properties, there's, as long as the money's in the bank account, some have no seasoning requirements. Like they don't need to see how long it's been in there. So it could be, it's in there today. They look and see that it's been, tomorrow and it's been in there. Great. They're good with that. Some are 60-day seasoning. So as long as the money's been in there for at least 60 days, they don't question it's where it came from.
Yep. Yeah, and that's the same thing with traditional financing. That's where the line is, 60 days. That's why we ask for 2 months of bank statements. You could literally deposit 15 grand from your safe, and if we wait 60 days and then it's now seasoned, that money is all yours. So that's an important thing to note too. That's why we don't want you to deposit just cash, because we won't be able to use it.
To see where it come from, because there's a seasoning requirements, right? Yeah, so some of these ones with, again, the no seasoning requirements, that's perfect.
Yeah,
you know,
literally you just throw the money in and you're good to go.
Yeah, I mean, and if you're, you've got a bank account or multiple bank accounts or multiple, maybe there's more than one person on the loan to buy the property. Well, if they've got enough, then
you're good.
It works.
Right, you're all set. We just need to verify the funds. We need to verify that, if there's
money's there.
Yeah, if there's 2 people on the loan, and if it's a daughter and mother, and the mother has all the money, right? We don't need to see it transfer from the mom to the daughter. If the mom is on the loan, the funds are verified, as long as she didn't do any sketchy stuff in the last 60 days, and we can close. How they handle that outside of it is completely on their own.
Right.
It's up to their discretion, but as long as the funds are there, we're good. So that's important to note too, right? It's just verifying the funds. How you get them after the fact is up to you, especially if there's 2 people on, and it's not husband and wife, or husband and husband, or wife and wife. Don't want to.
Yep. No, that's good to know.
Awesome.
There's some seasoning requirements on that.
Yeah. Trying to think.
So
actually.
Matt, I haven't heard you. Wish me happy birthday today.
Oh my Lord! I didn't even know it was your birthday, Rich. Happy birthday! I did not know.
I was feeling a little left out, but
I kind of feel like a little. I don't know.
That's okay. I walked in expecting balloons and a party, but what?
Way to go, Ed.
Yeah, no, but you know what? I live every day like it's my birthday, so it's all good.
Do we want to say how old you're turning on camera?
It feels like 51, but it's not anywhere close.
We'll leave it at that.
Yeah.
Well, happy birthday,
yeah,
Rich.
Hey, thanks.
Another year around. Congratulations on being born.
Yeah, yes. Yeah. Lucky
man.
world.
Right. That's awesome.
Yeah.
But guys, like we started out with, if you guys have questions, as you heard, we can call you in, we can Zoom you in. We want to hear from you. We want this to be informative for you, not just for us. So please ask away. We're going to keep posting on our social medias to make sure that you guys have chances to just ask. Not every episode is just going to be this format, but we got flooded with questions, so we wanted to break it up, so it wasn't just
great.
We didn't want a 2-hour Q&A. We wanted to kind of break this thing up, and we appreciate all of them. But if you have more, we'll start an episode answering 1 or 2 questions, and then we'll rifle off at the topic at hand. So both of our Instagrams, both of our Facebooks, and then obviously follow, subscribe to Money Matters, to Rich Racine on YouTube and all of his channels, and check out www.findnhomesforsale.com. Check for homes. You can touch base with either of us on there. Social media everywhere. Yeah, absolutely. We'll post everything in the handle, obviously. And yes, check out his website. Again, it's an unbelievable source. It's literally like a Zillow for Rich, and he gives you everything that you need. You can contact him right from that website. You can get pre-approved from that website, and it's a one-stop shop. So find NHHomesforsale.com. Awesome. And that is why money matters. Money matters, baby.